Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at another requested stock. This is UGI Corp, ticker UGI, and it's a utility slash energy company. So we'll dive right into the numbers, see what's going on here, see if it's a buy, sell, or a hold. We do see that they have been experiencing some nice top line growth, double-digit growth, which is what we like to see, speeding up in these last 2 years. And the earnings have been on an incredible run. In 2019, they were $1.44, and they have made their way up to $5.11 by the end of last year. This year, there's only expectations of coming in at $2.79, moving forward to $3.18. We'll see how this all plays out. But 2021 was an exceptional year for them. As we can see, $7.02. Very good. So there's definitely something going on with the accounting in that year that if it were to be a buy, we could dig deeper into. So the revenues, great growth. The expenses as a portion of revenue, we want to see this decreasing. Not necessarily seeing a sign of that. It was about 92 down to 84.4, 68.9, and then it was back up to 84 this last year. So there was a trend going from 2019 to 2021. We'll see what this year comes in, if it's a continuation and last year was an anomaly or what's going on there. But it is better than we had seen previously. So it's kind of yellow on that one. Earnings per share, a little all over the place. They climbed up to 2021, and now they're climbing back down, and they're expected to climb back up in the near future. So it's definitely very interesting. We can look at the earnings yield and see that it's at a good point right now. Back in 2019, it was a little low. 2020 was kind of attractive. 2021 definitely was. And then on has been pretty attractive for an earnings yield. Share count, one red flag, which will disqualify it from being a buy, is they have been growing their share count about 5.5% year over year. They have been slowing it down recently. They jumped from 178 to 209 to just north of that to almost 210. And if they continue the trend that they had been on, which it looks like they've definitely slowed down, they could go all the way up to 221. They'll probably come in around 210 to 211. Free cash flow yield. We do see kind of low numbers here. Nothing awful, but 2022 was a negative number. So they did have negative free cash flow. And we see a lot of 5 to 6%. 2021, again, was an exceptional year. Tangible book value, it is positive and it is growing. Definitely what we like to see, so that gets a check. Debt to equity, we want this less than 1. It's trending down, but it is more than 1. So again, that would disqualify it from becoming a buy. Too much debt. The ROE, not in the range that we're looking for. We want at least a 20, and they hit that in 2021, just shy of that in 2022. So I wouldn't expect them to break into that this year. So that would get a yellow, if not red. And then we can look down at the calculations here and see what's going on. Looks like the main driver for value this year is that balance sheet, followed by the cash flow of the dividend and the earnings. So the cash flow, dividend, and earnings are all very close in the 40s. Very close. So we'd be looking at a fair value around 45.5, which our ranges would then be, let's say $39. South of 39 would be a good place to pick it up with a nice margin of safety, and above $50 would be very overpriced, would be the time to consider selling out. Moving forward next year, we'd be looking at the value moving from that 45.5 to 49. That buy would move up to 42, and that sell would move up to 54. If we look back over the history of this stock, 31.5, 40, the exceptional year of 2021, 48, 49. So this year is a down year. Last year had a lot of value coming in off those earnings. So it is the drop in the earnings that really drops it for us here. It looks like it is kind of trading at value levels, but I don't see a whole lot of growth in this fair value. I think, if anything, it's mostly a dividend stock. They do have a decent yield. Right now, it'd be yielding 5.5% off the raised dividend that they're paying out and the low share value, because where it currently sits is the lowest that we've seen in the last 4 years, at least as of year-end numbers. And it has been on the decline. According to this, we'd be looking at a 6% compounding decrease in the price of the stock, which would likely be coming from a combination of them paying out a dividend and the support of the market not being there to prop it back up, but also them issuing more shares. And if the market's already not propping it up, that'll help drive down the price as well. We can look at some of the trends. This is a nice trend. Revenue does look like it is going to be pretty good over these next few years. A little bit below range was made up for by going above in 2022. As for the net, gross, and EBIT, this one looks a little all over the place. We do have a gross profit going up and then coming back down, and the same case for the net profit. The EBIT went down to a lesser degree. It is sitting higher in 2022. It'd be interesting to see how they come in this year. Balance sheet, nice, great trend in the assets. They are growing their tangible assets, which is what we really want to see. The liabilities are growing as well. The graphs look fairly similar, except this one is around the 20,000 level and this one's around the 12,000 level. So they do have quite a bit of debt. It is growing, not at the same degree or at the same magnitude of the assets, but that is something to be aware of. And the tangible book value here is growing, just like we see the tangible assets are growing. Cash flows, 2022 was not a good year for cash flow. That was the negative year that we saw. So ideally, we'd be waiting 3 years before we reevaluate this stock off those 22 numbers. But if we take the standard cash flow yield for the company, we'd be projecting out pretty much flat over the next 2 years. We saw some decent growth from 2019 to 2021, and we'll see how that plays out here in the future. The dividend, they are great at raising their dividend. In fact, they've been growing it at 0.6% a year. Very good. Slowed down a little bit more recently, 4.1, but once your dividend gets higher, it's hard to raise it at such a percentage, because they could be raising it the same amount, 5 cents, 6 cents per quarter. But of course, the percentage of that would be decreasing year over year. And then we can look at how everything is trending here. I know this one's a little bit messy, but it's just nice to identify where the share price is at. So that'd be this line right here. That's currently the lowest line. So that shows us it's definitely undervalued. And then there's that big cluster around 40. So once this thing does gain some traction, I wouldn't be surprised to see it racing back up towards the $40 range. High 30s, low to mid 40s would be where I'd expect to see it headed. But I have to give it a hold because it does not hit our quality criteria. And the growth is nothing exceptional. It's very slow and mostly in that $40 range for the last, we were projecting it out 2 years. So we're looking at 5 years of data here. And most of them are giving us numbers in the 40s. But that's all for this one. I want to thank you guys for watching. Please like if you enjoyed the video. If this is a stock that you own, comment if there's any other stocks you want me to look at or any earnings coming up that you think that we should take a dive into, and subscribe so you can stay up to date on all these stocks and see how the portfolio is doing, because I am now updating my numbers on a daily basis for tracking the portfolio, and it is looking good. Today, SPY was up 0.22. The buys were up 0.49, sells were up 0.43, and the holds were up 0.29. So if you were to invest $100 at the start of this week in each of the portfolios, this is what you'd be sitting with. So first place is the buys, which is what we'd like to see. That's what we'd expect to see. And last place actually is SPY. So all of the portfolios are outperforming SPY. No, the sells. Last place is the sells, and that is followed by SPY. So both the buy and the hold are outperforming SPY right now, which is interesting. We'll keep tracking this, so I'll catch you guys next time.